you're about to buy a property, don't go buy a car that you have to lease or finance. Don't go get a loan under your name. Don't go rack up your credit cards and buying furniture and all this stuff that you say, oh yeah, I'm gonna be buying it for the house. No, don't do that. If you wanna buy the car the day after you close your property, by all means. But before, don't do that. Hi guys, and welcome back to my channel. My name's Abby and this is my hub, a place for young individuals looking to get educated in real estate and mortgages, build wealth, and elevate in their businesses and careers. Last week we were talking about the whole pre-construction process, and for today I'm going to walk you guys through some common mistakes I see a lot of first-time home buyers making before buying a property, or actually while they're buying a property. And to be honest, I've done some of these mistakes myself, so I want to make sure you guys are avoiding it if you're trying to buy property in the year 2021. All right, so let's get right into it. So the biggest mistake I see first-time home buyers doing when trying to buy a property is buying a property before getting a pre-approval. It's one of the worst mistakes you can do as a first-time home buyer, because you can be buying a property that you have no business buying. And that's the issue. I've seen a lot of people come to me and be like, Abby, I already bought this property and I need a mortgage now. And I'll ask them, did you get a pre-approval before you bought this property? Oh no, I just bought it. I could afford the down payment, that's it. And I'm like, just because you think you can afford the down payment doesn't mean the banks think you can afford a down payment. And that's the difference. I always hear people come tell me, but Abby, I can afford a $3,000 mortgage every month. All right, that's fine if you think you can do that. However, what the banks think you can do is different from what you think you can do. The affordability that the banks look at is completely different from the affordability that you're looking at for your own self. So yes, maybe you think you can afford a $3,000 mortgage, but the banks are like, no, I don't think you can afford it. And living in Canada, we know that we have a more stricter banking system. So they're not gonna give a mortgage loan to someone they think they can't afford the payments. As much as you think you can afford the payments, if the bank thinks that you can't afford the payments, girl, boy, whoever, you're not getting that. You're not getting that mortgage loan, okay? So, like I'm gonna repeat, the biggest mistake I see a lot of first-time home buyers doing is buying a property before getting a pre-approval. That is a complete no-no. We're not doing that anymore, okay guys? All right? So before you buy a property, get a pre-approval. Know what you can afford. Know your purchasing power. Your purchasing power is basically the amount that you know that you can actually afford in the eyes of the bank. So after doing a pre-approval, you'll get a certain ballpark essentially of how much the banks think that you can afford, and this should cap the amount that you're going to be purchasing. And this brings me to my next point. Another mistake I see a lot of first-time home buyers doing is not taking into account closing costs. Yes, closing costs. So when you're buying a property, it's not only about getting your down payment amount, you also need to consider closing costs. And I always tell people this: closing costs can range from anywhere between 1.5 to 3% of the purchase price of the property that you purchase. So for example, let's say you bought a house for $100,000, which would never really happen nowadays, but anyways, let's just say you bought a house for $100,000. So the closing costs will range from 1.5 to 3% of that property, of the purchase price of the property. So for a $100,000 house, you're looking to save about anywhere between $1,500 to $3,000, but that's on a $100,000 house, right? So when you're looking for closing costs, make sure you do your calculations. If you're buying a property of $600,000, do the max amount. If it's 3%, take 3% of the purchase price and have that saved there. Keep that into account, because closing costs will catch you by surprise. And honestly, I've been there where I had no idea how much my closing cost was, and let's just say, guys, I was in for a shock. A big shock actually. So please take that into account, closing costs, because it's really, really important, and it does blindside a lot of people. All right, so the next mistake I see a lot of first-time home buyers doing is assuming that they need hundreds of thousands of dollars for a down payment. You really don't need that much. You actually only need 5% of the purchase price. That's it. I know it seems so out of reach, but 5% is actually not that much. Well, it's still money, but I mean, it's doable, guys. So let's say the property you're looking at is only $500,000. You only need 5% of that. So that's basically $25,000 for your down payment. So that's just your down payment. I'm not including closing costs, but I'm thinking about when it comes to down payment, you actually only need about $25,000 to buy a $500,000 property. However, that doesn't mean that you can actually afford a $500,000 property, because you have to take into account that your income, your credit, and your liabilities do play a part when trying to figure out your affordability. So make sure you take that into account. Just because you have $25,000 does not mean that that's suffice enough for you to know that I can actually buy a property, because you may not be able to afford it based off your income, your credit, and your liabilities. So for the most part, it's a really good step, but make sure you talk to a professional that can help guide you in the right way. So if you have any questions, like I said, always contact me and we can kind of go through those numbers. All right, so the next big mistake I see a lot of first-time home buyers doing is assuming a lot of debt before buying a property. Like, this one actually breaks my heart. They'll tell me, Abby, I'm gonna buy a house, and then you go buy a car that you're financing or you're leasing, or you go buy furniture on your credit card that's worth like $10,000. No, guys, don't do that. That's actually a big no-no. When you're about to buy a property, do not go buy a car, do not take a huge loan, don't rack up on your credit cards. Do not do this when you're about to buy a property. That's actually one of the worst mistakes to do when you're about to buy a property, because you're making your liabilities high. So when you do this, you have more expenses, and this is how the banks look at you. When the banks are trying to determine your affordability, they look at your monthly expenses. And if you have a car payment, a furniture payment, high credit card bills, your expenses every month is going to be high. And based off of that, they're gonna think, okay, this person can't afford this amount of mortgage because they already have a lot of other expenses. So why would we give this person a mortgage loan? They can barely afford what they have right now. All right, guys, so if you're about to buy a property, don't go buy a car that you have to lease or finance. Don't go get a loan under your name. Don't go rack up your credit cards and buying furniture and all this stuff that you say, oh yeah, I'm gonna be buying it for the house. No, don't do that. If you wanna buy the car the day after you close your property, by all means. But before, don't do that. Don't go buy a car, don't get a loan, don't rack up on your credit cards, because that will legit make your affordability really, really low. You may not even be able to afford a decent home because of the fact that you have such high liabilities. And this is how the banks look at you. They don't only look at your down payment amount, they're also looking at your credit score and looking at how many liabilities that you have. So the higher your liabilities, the lower purchasing power you're possibly gonna have. So please don't go lease or finance a car before you buy a property. Wait until afterwards. So this next point might shock people just a little bit, because it's like, oh my gosh, like why would that even affect me getting a mortgage or buying a property? But if you're about to buy a property, it's not best to be switching jobs. The reason being is because lenders like to look at your income that's coming in. And if they see that you just got a new job, they're gonna be like, okay, is this person on probation still? Is this person gonna keep the job still? The lenders don't like to see inconsistency. They wanna make sure that you're actually securing the job, and after they give you the mortgage loan, that job will be enough for you to pay your mortgage. So let's say you get a job and you're only 1 month in. Yeah, you may have gotten a pay increase, but however, the banks are gonna be like, okay, you know what? Let's wait until you actually like past your probation, because who knows what can happen between the first day and the 60th day of your job. If you do get fired, God forbid though, you lost a job and you possibly won't be able to pay your mortgage payments. And as a result, banks don't like that. They don't like high risk people assuming mortgages. So they want to make sure that you're actually secured in your job. So don't be switching your job right before you're about to buy a property. You want to make sure you have a consistent flow going on. The next mistake I see a lot of first-time home buyers doing is taking advice from people who have no business giving you advice. Like, I'm gonna say it like that, just plain. Some people just have no business giving real estate advice, especially when they're talking out of fear. There's a lot of people that will just come to you and be like, you know what, don't buy this, the market's gonna crash, and this, and like, this is why I won't buy property here, because the market's gonna crash, and this and that, and all these conspiracy theories about real estate and all this stuff. I'm just like, what are you saying? Like, come on. Because you're scared to buy a property, now you want to inflict fear into somebody else? Come on, don't do that. So those type of people, don't listen to them, okay? Don't listen to them. Talk to people that actually know what they're talking about. And it doesn't only have to be real estate agents or mortgage agents or real estate investors. Some people actually have good knowledge of real estate that are just regular home buyers, regular people that have been taking advantage of real estate and have been able to make money with real estate. But for the people that are just instilling fear into you the whole time, block them out. Don't be disrespectful, but just block them out, because sometimes people will be just saying things that they have no evidence about. Like, I've heard people tell, like, oh yeah, you know, I've heard the market's gonna crash in 2016, so don't buy a property. That's why all the properties are jumping. I remember that person telling me this, and like till this day, it's like, so are you still waiting for the market to crash? So you're not, you're just, okay. Me, I don't even have time for you. I won't even argue. If the market crashes, that's fine. It'll eventually go back up. You can't time the market. Like, people try to time the market so badly. We can't time the market. The market goes up and down. Like, no one expected COVID to happen. No one expected this to happen to the world. So you can't really try to say like, I know exactly what's gonna happen. And if you're scared about the market crash, you should be scared about a lot of different things in this world. Because honestly, this world is a really scary place. So for that, don't be taking advice from people that have no business giving you advice when it comes to real estate, or just in general, anything. Okay? All right, guys. The next mistake I'm gonna be talking about is kind of tied into the last mistake I just talked about. However, it's more so for the professionals. There's some mortgage agents and some real estate agents that have no business being in the profession that they're in, because they actually don't care about their clients. They don't care about anyone but themselves. Don't hire those people. Just don't. Do yourself the favor and don't hire a person that you can tell doesn't care about you or doesn't even understand what they're doing and they're just in it to make money. We all have bills and expenses to pay, but if you can see that person is really not really knowledgeable and they're just kind of forcing you and they're trying to pushing you to buy and not really taking the time to educate you or to talk to you, don't go with that person. Like, honestly, like for me, I'll go with my gut feeling sometimes. Sometimes I can just get a vibe off of a person. Like, honestly, like I don't vibe off with this person. I don't feel like I can work well with this person. And to be honest, if you can't work well with your mortgage agent, your real estate agent, you shouldn't be working with them at all. They should be very understanding. You should also be very understanding. You should have a good communication flow going. So if you have a real estate agent or a mortgage agent that's not trusted, that you don't feel like you can talk to, that doesn't give you good answers, or doesn't really know what they're saying, or it's not really honest. Like I said, nobody knows everything, but you want to try to at least find the answers for your clients. And some people just won't do that at all. So if that's the agent that you're working with, no matter who recommended you to them, no matter who referred you, if your aunt, your uncle, your mom, your dad referred you to them, don't work with them if you don't feel like you can work with them. And honestly, that's just my honest opinion. Like, I've had certain people that I've worked with them, like, honestly, it's not gonna work out. Like, no. I'm sorry. So yeah, for the most part, don't work with somebody that you know you can't work with or you don't feel like you can kind of communicate with. That's a complete no. These are some common first-time home buyers mistakes I see a lot of people doing. So I just thought, why not share this with you guys so you guys can educate yourself and also avoid these mistakes. Try your hardest to avoid these mistakes, and to do so, come talk to me before you buy a property. And if you're already in one of these situations, still come talk to me, guys. All right, guys, so that's it for today. Thank you guys for tuning in. So if you like what you see so far, please like, share, comment, subscribe to my channel, and also follow me on Instagram. And yeah, I'll see you guys next week. Thank you, guys.